say make money, money, make money, money, money. Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town.
Welcome in to Just the Tips with the Stock Jocks. This is our, fourth episode, boys? I'm here with Bruce and Gordon, and I, of course, am Georgie. I've renamed myself from George, so I hope you guys like it. What do you think of the new name?
It's very diminutive, like other parts of you, I'm sure.
I hate it.
You guys are so supportive. I love it. I feel like we're really a team here.
You're such a sub.
Maybe just a little small talk. Brucie, I understand that you had a kid's birthday today. So was anything falling from the sky? I assume not Easter bunnies this time, but what did you do? How does the 1% celebrate their kids' birthdays?
And was Matt Getz there? Is like a talent scout?
No, when you say 1%, I think you're referring to the bottom one. We didn't do anything crazy. We had some family over. We had some cake. We had some Taylor Swift themed everything. And really, that was about it. She keeps showing me links to go to the Eras tour, but I think it's over in the United States. So she's like, here, these tickets are only $300, but the concert's in Paris.
Yeah, she's got the right idea.
So the answer is no, and we got her some bracelets because I think that's the thing these days with Taylor Swift, and we're listening to the Tortured Poet Society nonstop. But I don't know. Other than that, it was just a pretty straightforward 9-year-old birthday. Nothing to write home about.
I've seen Taylor's a little more cutting edge in this album. Like she's got some not so nice words for Kim Kardashian.
There's a diss track.
Are you okay with your 9-year-old listening to some of these profanities? It's not the old Taylor.
Look, if you look, I think like when I think about where music is today, Taylor's probably as good as we're gonna do. You're wearing your P. Diddy shirt, I can see. So that's already.
I was his 13-year-old protege. He opened my eyes to some things.
That's already a big question mark. But it basically sets the bar just so incredibly low that really everything's up. And I've always been just a massive Swiftie, so she can really do no wrong. A Kim Kardashian diss track is probably the least of my concerns at this point.
There's no doubt who's hotter, right? Kim K is still knocking the cover off, from my perspective. She's a little bit plastic, but I'm not even sure that Taylor's attractive. She's skinny and blonde. She's just hot in that sort of 90s Maxim way. Anyway, I'm sure that she's great for the corn-fed white boys of Kansas City.
Isn't that you, Gordon?
No. I'm like Wolverine. I have a mysterious background. There's like a saga about me out there.
I think Taylor's got it all, man. She's got like a 747, a fleet of G5s. She's got.
Does it for me. I'm sold.
Like a chicken wing with no meat on it.
Kim Kardashian's probably got an equal amount of money / planes, so we should.
There you go.
Maybe that part's probably a wash, but I don't know, man. I'm just a big Taylor fan all around.
I will say, I guarantee you, like in an apocalypse, that Kim Kardashian would be like a hairy ape. Right?
I will say, as long as we're talking about Taylor Swift, I will say one thing. So she's dating Travis Kelce, as everybody knows, and I'm a huge Detroit Lions fan, and like the Kansas City Chiefs don't need any more help. Like they don't need the biggest superstar on earth dating their super famous tight end after they win the Super Bowl. Like she needs to date a Detroit Lion. She needs to date Jared Goff or someone. We need
Jared
more.
Goff's girlfriend is not bad looking either.
I don't disagree with that, but I'm saying, but she's not Taylor Swift. We could really use the help here. Like the Kansas City Chiefs, they don't need any help.
Hey, I went to the 49ers and Lions playoff game, and Eminem was just down a few boxes from me, and he was repping Detroit. He gave everybody in the crowd 2 middle fingers. What more do you need?
Do you see that humble brag? Gordon, did you hear that humble brag? Eminem was just a couple boxes down at the Detroit-San Francisco playoff game. Wasn't a big deal.
Anyways, all right. So no Easter bunnies falling out of the sky this birthday.
All right. We should do the disclaimer, right? None of this buffoonery should be considered investment advice because it is ultimately buffoonery. Equities, options, and other financial instruments involve risk of loss of principal in personal relationships, including wives and sugar babies. Consult a financial advisor.
Let's move on. We're going to talk about today because we're talking largely women's fashion brand here, which we'll tease in a minute. But let's see, Gordon. I think I got chastised for my news drop last week. Do you wanna hit it and give
I
us
was
the?
going to propose that only one of us hasn't done it.
Oh, that's right. All right, Brucie, you're
We
up.
need some kind of,
News drop.
So fucking weak.
It had a little extra flair in there. I'm not sure what it was.
You remember? You had a rhythm. It was like, I don't know what that was.
Anyways, moving on from the news drop into the news. One of the things that maybe we'll touch upon, since last time we were talking about some of the recent IPOs, is maybe coming attractions. And so I think Rubrik, which is in the infrastructure layer, has been a private company for a long time, filed their S1. They're looking to come public. It seems like indeed the market is opening up for IPOs. Bruce, I think you've spent some time looking at that S1. You might have some thoughts there on it. Curious what you think. Is it something that our listeners should be paying attention to? Is it interesting, or is this just some garbage trying to pick up on the tailwinds of those last IPOs?
No, I think Rubrik's a really interesting company. So it started as a backup and storage company, and it's changed the narrative a little bit to be more of a cybersecurity company for a lot of reasons. I think one, cybersecurity has been more resilient as a category. Two, their data and storage kind of backup origin lent well into building a cybersecurity story. And three, I think that being characterized as a cybersecurity company has net benefits from a valuation standpoint. They also, have a platform that addresses broad-based security concerns. So just as a little bit of background on what they do, they're a data backup and storage company, but effectively, as enterprises think about how to, back up everything that they're saving from an enterprise standpoint, what all their knowledge workers are working on, they want to make sure that all that data is consistent. They want to make sure that they can understand the blast radius if something happens, if something gets compromised. They want to make sure that their posture stays performant. And then in the case that something is compromised, they want to be able to recover that. So if you think about an enterprise and all the data that they create on even a daily basis, being able to manage that in real time, really, so not just snapshots of point in time, but manage that in real time is a complex part of their infrastructure, but also a very lucrative part of the ecosystem for backup and storage providers. There's two kind of main companies that people talk about, at least in the private ecosystem, for backup and data storage. One is Rubrik, and the other is Cohesity, which is another big data and backup storage company. They recently acquired Veritas from EMC, so they're becoming an even bigger company. I think at some point we'll probably see an IPO from Cohesity as well. I would say the one thing that kind of stuck out to me as I think they're on the roadshow right now, and so they've indicated an initial range of what this IPO should look like. And Rubrik, in their most recent year, so in the year ending 2023, did $784 million in ARR, which is a ton of revenue in ARR for a company that's going public. If you guys remember, even just a couple of years ago, companies would think about going public at $100 million in ARR or $100 million of revenue. And now that kind of window has closed. When you talk to bankers today, they basically tell most companies and most venture folks that really to entertain going public, you need 200, 250 plus of ARR. You need pretty significant growth, and you need a narrative at least around getting to efficiency or some form of cash flow. And most companies don't have one, let alone all three of those things. And so Rubrik has shown a couple of things. One, they definitely have the ARR to back up an IPO story. They're growing at faster than 40%. They have large scale enterprise customers, and they're not free cash flow positive, but they're only negative 4% in free cash flow margin. So there's a narrative around them getting to real profitability / cash flow in probably the foreseeable future. And if we think
wait, though, they only grew. I'm looking at some research or an article here saying they only grew 5% last year.
So they grew 5% in GAAP revenue, and that's a good point. I'm glad you brought it up. They grew 5% in GAAP revenue, but there's a lot of noise in that number. They're moving from a perpetual business to a recurring business, and the recurring business grew 40%. I think most investors, when they look at this, when they look at the operating model here, they're actually giving them credit for the ARR and the growth, because the growth is largely baked into that ARR number. It might not be baked into the revenue number, but it's baked into the ARR number. And so
maybe they're giving them the Adobe sort of story here, but it's, by the way, I was going to say also that yes, there's been like 2021, there was like this narrow window where a bunch of little software companies came out at 100 million in ARR or less, even sometimes. The vast majority of tech IPOs in the 5 years prior to 21 were like Uber, Lyft, Facebook, like just massive, many billion-dollar revenue companies printing many billions of losses. VC-backed companies, like the SPAC craze was part of that too, right? Most of the companies not have gotten out without the help of SPAC. So I want to caveat what you just said, that yeah, they are, the real historical IPO market for the last 5 years or so has mostly been dominated by large cap. So yeah, they look big relative to some of the crappy companies that came out with SPACs and in that crazy valuation time, but this is not a super high quality IPO. And the other thing I would ask is, do you think that it makes a ton of sense that a company that was almost all storage pivoted to security and deserves a security multiple like that rapidly? It just feels to me like they repositioned this, and there's something very cynical about what you're saying about how security is a better multiple, so that's what we're calling it. Like, is it security or not? And you're an expert in security.
I think from my perspective, it almost doesn't matter what they do. Like if I'm an enterprise software investor, it only matters like how fast they're growing and if they can get to profitability. If you're worried about efficiency, this company, because when you think about the public markets today, there really are no enterprise software companies that are growing faster than 30% across the entire market. And that's like taking into consideration CrowdStrike and Snowflake and SentinelOne. And so I think it's a very rare company that will have this amount of scale that will go public at 40% plus growth. If their ARR is growing at 40%, then you could reasonably expect that to go down over time, but it would go down to, meaning next year, it should be at like 850 or 880. This thing is going to trade at like 6 times effectively on an ARR basis, which is just incredibly low. It's almost inconceivably low given how fast the company is growing and at that scale. And really even their look ahead on free cash flow. So I think it's one of those companies where it's like bucking the trend by going public now, but it should be a really good data point for where the rest of the enterprise software market is, because most companies aren't even at this scale, at this growth, or having a look at free cash flow positivity. So I think it'll be interesting, but it just goes to show, I think investors are still sitting on the sidelines in terms of valuation because they published what the range looks like here on the IPO cover. My expectation is that it will move up as they go through the roadshow over the next couple of weeks, and it'll price even higher, similar to what happened with Astera and maybe Reddit to some extent. But it's just incredible to see them go out with such a low number.
Yeah, I would say too, they've moved into ransomware. Ransomware has been in the headlines a ton, right? And so backup lends itself to ransomware, because what is ransomware? You're holding up someone's data, their network, not releasing it, right? And so if you back up regularly, you're going to have that data. But look at like United Health made big headlines here just last week, I think it was, where they said the ransomware attack that they experienced cost them almost $1 billion. I think it was close to 872 million is what I'm seeing here, charge for that. That's humongous. So imagine if you're an organization, you're looking at that. And that's the most popular type of attack these days, because these attackers can really get paid on ransomware. And go through like the list of like ransomware attacks that have happened. It's huge brands that are experiencing this. And so I think they have just a growing market for their product that's going to continue to be robust. For me, I'm more bullish here as well, along with Bruce.
I got to tell you guys one more thing before you continue and respond to that, Bruce, is that you guys need to understand how much investors hate storage companies. And at the end of the day, it's like Nutanix, Pure Storage, like all these companies were growing 50% at one time, and they were getting like 2 times sales. Because
there's a difference between infrastructure though and end user applications. and it's not just pure storage, right? It's the application on top of that storage.
That's fair to an extent. At the end of the day, these guys were a storage company, basically, and they somehow pivoted magically to security a few years ago, and so we're all getting excited about putting a nice multiple. But I bet you they're going to get the storage discount when this is all over. Like, you just, unless you really want to tell me, Bruce, this is, by the way, ransomware is not security. It's basically storage. It's basically keeping people out of your data.
I think ransom is definitely security. It falls in squarely into the neighborhood of how every single security company characterizes their offering. One kind of sub bullet though is that Nutanix is back. That company's basically at its all-time high now. It's a $15 billion company. And they're not necessarily back on storage. They're back on the Broadcom acquisition of VMware and all of VMware's customers getting a massive bill. But Nutanix is definitely back in investor favor.
I think that it's all good points. I just feel like I've been fooled so many times. Like, anytime like you just think that a growth company in storage is going to get a multiple, I'm not sure it's ever happened. Like, it's the persistent 0.5 to 2 times. Like, it's just slightly better than servers and not much better. And so we'll see. But if they really are a security company, that's a good point.
Easy to pivot into, then every storage company would be in ransomware. There's
My
more
last
to it than
company
that.
was a ransomware company. Like, there's a ton of companies that all they do is make your data immutable. That's what ransomware protection is. Nobody can delete it unless they delete the account. So I'm surprised to hear you guys talking about ransomware like it's some big thing, because like all these object storage vendors provide that. So
my thing is just give me an enterprise company that's growing 40% trading at 6 times. I'll take it.
It's just, at the end of the day, like, it's just, storage is just not a sexy business. People will not pay for data growth. So whether you like it or not. Anyway.
Let's talk about a sexy business. So let's pivot to the main event. Speaking of sexy businesses, maybe Gordon, I think you're going to be the moderator. Do you want to do the honors here and introduce the company and do the coin flip on bull versus bear?
Yeah, absolutely. Anyway, I think it's our first really kind of consumer name. It's apparel. From my perspective, it's historically mercurial industry. It doesn't come to my mind like quality yoga stretch pants, but in the spirit of trying something different and potentially arousing topic, I'm keeping an open mind. I'll be your moderator. How about I'm going to do a coin flip, and it's heads. What were you thinking?
I was definitely heads.
What were you thinking, Bruce? Were you thinking heads or tails?
I was thinking tails.
Oh. That means it's. I'm sorry. I guess that George gets to pick.
All right, I'm gonna take the bull case here. I think over to me to make this happen. All right, so let's introduce this bad boy. I'm gonna pull up some slides here, and I will make sure I'm talking to our listening only audience as well. So if I start leaning too much on my slides, let me know. And the stock we are talking about is Lululemon. So I've got this entitled "When Life Hands You Lemons, Make Yoga Pants." My daughter didn't find that too funny. I thought it was hilarious. We've got different humor, but the subtitle though is "See Through the Near-Term Turbulence," with "see through" in quotes. So if you remember Lululemon, they had a debacle a couple years ago with see-through yoga pant that had them recall quite a few and got them in the news quite a bit, as apparently when you were doing some stretching or some exercises, you could see right through the yoga pants.
But so there's near-term turbulence. You're foreshadowing here, but just wanted to check in on that part of the subheading.
There's near-term turbulence, which is why I think this is an interesting one to talk about. If it's just all good, then all the upside is already priced in. So I think this one has been down 25% or so from all-time highs, and so the question is, does it continue to trend down, or is there some opportunity here to buy like a grade A company at a discount? And so I think that's a falling knife. No, it's not DigitalOcean.
I have some capital to go back to work from my super micro gains from buying the puts. So this is a good conversation. This is timely. I got capital to work.
As of Friday, you're rich for a day finally.
It was an amazing. My Sharp ratio wasn't high, but 55% in a month is not bad. I'll take it.
I will take that as well. All right. So this is a little foreshadowing here. I've got a picture of some lovely bags. When you think of Lululemon, you don't necessarily think of bags, but I was hoping, Bruce, you were going to say that you got your daughter a Lululemon bag for her birthday, but my daughter, who is 13, actually has a Lululemon bag, as does my wife. And it's not necessarily what you think of, but we'll talk some more about that here in a minute. So who is Lululemon? So Lululemon is most famous for making yoga pants and apparel, particularly strong within the women's segment. They also make other gear, but I would say they are really known for their pants. They do also make clothing for men, but really where they took off is the yoga scene. And it's originally a company out of Canada, but trades here in the US. They have an enterprise value of almost 44 billion. Today, almost neutral on cash versus debt. So very little, I would say, carries very little debt, 1.4 billion total. They have been, I have a chart here on the slide that shows their performance since 2010. I think they IPO'd in 2008. If you go back, it's even more compelling. But if you look at them versus the S&P 500 versus even say Nike, who's a category killer in sports apparel, this stock has been a rocket ship. So they are up almost 2,700%, 2,700% since 2010. Now it's 14 years, but there's a few stocks that move like that. And this thing has really been a rocket ship. And so really takes off around the 2018 timeframe. It's been doing well. It's generally been up and to the right. I would say they had some sideway years in the mid 2010s, but 2018 starts taking off. The pandemic hits, they go down a bit, and then everybody works from home. Athleisure just takes off, and so they've just been a complete rocket ship. You look at Nike in that same time frame, nothing to laugh at. You invested in Nike in 2010, you have almost a 550% return. Not too shabby. S&P all over S&P versus that is 344%. So this is a company that's created significant alpha that really, I would say, very few saw coming. And they're a best in class operator, right? If you look at their stores and what they sell per square foot, it's off the charts versus others in the retail space. So they average almost 1,600 per store per square foot of sales. That's just ridiculous. And so they're a very strong operator and they do a great job at that. However,
Do you think I had a question.
Just a quick question.
yes.
In terms of like how you think about the value of the stock, whether it's them or Nike or Google or any company, I think if you extend the timeline back far enough for a lot of great companies, you'll see this like asymmetric rise in their share price or this geometric rise in their share price. Like, how do you, I guess, think about that relative to current valuation, future growth, and the overall story for most companies, just given the fact that like a lot of the value, for example, in like a Google or a Nike or a large company has already been baked in? Like, how do you think
Yeah.
about that as it relates to the future?
It's like you're teeing me up. No, I think you got to look at any company and say, can you imagine, like you reference like Google, if Google is, and I don't know their current market cap off the top of my head, but it's between 1 and 2 trillion, big range there. Can it double?
It's actually over two, I think. I mean, check
Is
that.
it over 2? Yeah. Can
Yeah.
it double? Can you get to $4 trillion? That's a huge task, right? If you look in the apparel industry, I think of Nike as being the gold standard here. And so Nike's a $140 billion company. Lululemon is, as I was talking earlier, 44 billion enterprise value. Could you go 3x from here? Could you become Nike? It has someone that has demonstrated that playbook, so it is possible. But I agree with you. It's not like investing in this thing back in 2010. You don't have that kind of opportunity set. So you're saying here, can I get a double on what should be a class A brand that everybody knows, everybody appreciates, has that underpinning because it is so well known? And is there a growth story that supports that? I would argue for this, yes, it does. So let's talk about it. Lulu talks about they've done this once before and they set out a plan to double their revenues. And they most recently did that in 2021, and they came up with a 5-year plan to double their revenues by 2026. And they had done this previously 3 years before. They said, we're going to double it. They came up with their power of 3 times 2, and they hit those metrics. They hit all of them. And so this they put out in 2021. And so they're a couple years into that, 3 years into that, going into year number 3. And there's a few things that I think are working really well for them, and maybe one that's not working so well. And we'll talk about that a little bit. But the 3 things are they want to continue doubling down on product innovation, and they specifically call it men's. They've been an innovator throughout their history, new fabrics, things of that nature. They want to double down the guest experience, double down on digital. And that's the one where I think it's a little more questionable, the value, and I don't hit upon that as much, to be honest with you, in this presentation. The third, which I do spend time on, is quadruple international and expand markets. And so that's one where I think there's a lot of interesting signs here that get me excited about the stock. And they want to do all that with impact. They're very ES-friendly companies, so they want to think about the impact on the planet as well as people themselves.
By the way,
it looks like Bruce is anti-planet, so he's giving me a thumbs down.
He's from Florida. So does anybody know an actual man that wears anything from Lululemon, unless that you had to throw it onto your body after you got laid and you were just scrambling because her husband came home? Like, why would you wear Lululemon if you're a man? I'm confused.
Gordon, if you've got muscles like these, then you want to show them off. If you've got the body of a 50-year-old, then that's a different story.
I'm taking the short side, and I will say that Lululemon does have quality apparel. I do have a couple of their polos and a couple of their pants. Actually, they make my butt look good. So,
wait, who verifies this fact? I'd like to understand.
Man card revoked. All right, sorry to interrupt.
If you're not familiar, they are a premium brand, both because of what they do to Bruce's rear quarters as well as just the price point.
Do you think David Sachs owns this stock?
No.
And why?
Probably not.
It's an overvalued consumer name that is on the way down.
I'm not sure that's why David Sachs doesn't own it.
That's why I don't own it.
So they have a plan. They think this plan is going to double their business, double their revenue in 5 years again, which is a very ambitious goal for a company of this size and maturity. But they did it last time, so they've put a target out, and their long-term targets, they hit them. They're doing it again. So they've achieved some credibility, I think, in my mind. You see a lot of businesses put out targets and don't hit them. They've actually done it. So this is the second of these types of plans. So the first part is product innovation.
Oh, pinch and zoom.
One question on the plan, though. Do analysts agree with them that they will actually be hitting these very aggressive targets?
It's a good question. I'll have to go back and look at estimates that analysts actually have it lined up to that. My guess is they're more conservative than that, and so this is the upside, but it is a very valid question. Do you know the answer to that, Bruce? I feel like you're setting me up.
The short answer is no. The longer answer is also no.
There's the opportunity. Do you buy it or do you not? And I would say I think these guys have more credibility, and that's why to hit targets they put out before, and that's why the stock has performed as well as it has, because they've been outperforming what the analysts think. So they have a history of doing it. And so the question for the stock is, do you believe in the execution here to go do it? And so number one, I think it's around product innovation. And so they continue to think about their core market, which is women's leisure wear, particularly for yoga, but really think about the pants. Category extensions as well. So what are new categories? Men's would be one of those that they haven't fully cracked, as you alluded to, Gordon. You're not slipping on Lululemon today, though I could see Bruce going to his Taylor Swift concert in some nice Lululemon. Anyways, I think where a lot of their innovation has come in, just to give you the context, is really around like the fabrics, right? And that's really what they're known for, is having unique fabrics. So they are a company that innovates. We said up front, hey, they're not a tech company, but if you go through the different fabrics that they've created, they create a new look. They create a nice look, both in terms of accentuating people's curves or natural muscle tones, etc., in a flattering way, as well as being performance fabric. So letting you sweat and breathe as you exercise, and that's something they talk about quite a bit. But if you go through like over their lifetime here, there's a number of different fabrics they've come up with that are unique. So their products aren't just the same old thing that a Gap Athleta is putting out in the marketplace. They are truly an innovator. So they've had Luon, they've had Luxstream, they've had Nulu, which is their naked sensation line, Everlux. They've now partnered with a company called Geno to release plant-based nylon. So again, a little bit on the woke side there to your comments, but they're appealing to
I gotta
different
stop.
groups.
I gotta stop this. Right at the end of the day, like Lululemon, like what? One sentence. What are they known for? They make women's butts look great. Am I lying? Like, how many Marina C pluses from the Midwest went to Marina B pluses? Just putting these pants on.
And men's butts. Look
Yeah,
good.
don't forget about Bruce. Don't forget about Bruce.
No. I think let's just distill it down. What does the consumer really think about this brand? And they're not listing off 6 different technologies about fabric innovation.
No, but they
They're
appreciate it, right?
saying,
They feel different. They are differentiating, and they're differentiating with their R&D, and that shows up in the fabric. And that,
let's just call a spade and say these things just make people's butts look good, or at least that's the perception that you buy one of these things and your butt looks better. And there's something magic about that, and they can throw these patents up there. But at the end of the day, it's all about support, I think.
there's support, and I do think there's something to, and I will admit I have not worn Lululemon as a man, but there's a lot of testimonials towards being able to breathe and work out better as you sweat. So I think that is another benefit. In addition to their innovation around fabrics, they are also looking at new categories. So it's run, it's train, it's different activities, golf, tennis. They're switching to new categories. So beyond shoes. So if you think of Nike, Nike started with shoes and they went into apparel. Here, you have started with yoga pants and apparel, and you're moving and shirts and things like that, and you're moving to shoes, you're moving to bags, like I showed up front. So they are expanding that product category. They're very much following that Nike playbook in many ways. So that's one pillar, is the innovation. As I mentioned, I'm not going to talk too much about their pillar 2 because I don't personally buy into it as much. But I think pillar number 3, which is market expansion. So they've been pretty much a North American company to date. All of that growth has really come on the back of North America, US and Canada. And so what they said in 2021 is they are 1% of their total addressable market of 650 billion. So they've got a long ways to go in their mind to go capture this athletic wear market out there. And so how are they doing that? How are they going to do that? So in Q4, they talked quite a bit about international. And so I just grabbed a couple of highlights there. So today, international is 21% of their business. So it's still a minority. And they operate a total of 273 stores in international markets. So very small amount. There's still a lot of opportunity there. They are forecasting along that same vein of they're good at hitting targets historically. They expect their international to represent half of their overall revenue, and that's over the long term. So huge opportunity set there if they can even get close to that. What they saw recently in that fourth quarter was overall revenue increased by 16%. Americas was just under double digits at 9%, but China, which has been one of their stars, increased by 78%. So just take that in, 78%. The rest of the world also increased by 36%. So they're seeing higher growth in those categories. The other category that jumped out to me just to highlight, as we talked about, and I showed the bags up front, accessories increased by 40%. So they've got a couple of bright spots here that are showing up and are driving results. When you look at that from a actual P&L standpoint, they, in the last 12 months towards the end of January here, total revenues were about 9.6 billion. About the majority of that, 7.6, came from the Americas. Mainland China, which is their biggest international market, was just under a billion, and the rest of the world was right around a billion as well. What you see in those growth rates is an acceleration, not just high growth, but an acceleration both in mainland China, which went from 33% in 2023 to 67% in 2024. So growth rate doubling. Rest of the world is also accelerating, no, not at the same pace. And one of the things I see, Bruce wants to cut me off here, but before he does, one of the things that I thought when I first looked at this was, oh, China, you're getting lousy margins. Like your business probably sucks there. Like most tech companies, that's the case. You go into India, you go into China, you go into these kind of emerging markets. Usually you get hammered on your margins. Here, their margins are right in line with North America. So operating profit before tax as a percentage of revenue, what they get in America is 38%. In China, they actually get 35%. That's right on the mark. So really impressive growth opportunity in a big market in China. All right, Bruce, I will let.
But I just have a question. I mean, I think China is a big growth opportunity, but it's a big growth opportunity for everybody as you think about international expansion. Do you think that you can offset decelerating growth in the United States or North America plus Europe with accelerating growth in China? I think we've seen a lot of companies, especially on the hardware side, whether it's Apple or Tesla, expand into the Chinese market, and that market become a big part of kind of their overall like geographic revenue mix. But can you offset what's effectively a slower growing, maybe decelerating market in the United States with growth in China? And do investors or will investors give you credit for that or no?
Yeah, I think they will. Look at Nike. Nike is a global brand, right? Nike is huge everywhere. And a lot of that is China as well, though they sell like something like $7 billion of apparel, which is almost Lululemon's whole North America line today in China alone. And so there is huge opportunity there for them. And I think they are following very much the Nike playbook. It's expand geos and expand your product line from your areas of strength. And you can really become this global behemoth off the back of strong product and strong brand. And that's exactly the playbook they're following here. And so China is kind of the first of that. They're operating in other parts of the world, but I'd rather see them in one huge economy doing really well versus a bunch of little economies and trying to localize product. Like to me, them being in a single market, China, and having that kind of result is great because they can drive more efficiency that way. So I'm excited to see it. I think as long as the margins are there, investors aren't going to care. To your point earlier, growth is growth, right? Profit is profit.
I think I think the comp to Nike though is similar to most tech companies comping themselves to Google or to Facebook. It's one of those things where you have a real best of breed company that's been
Lulu is
operating
best
for
of breed. Look at that chart up front. They're outperforming Nike.
but in a very like specific time period. I think if you look at Nike since inception versus Lulu since inception, you'll see something very different. It's one of those things where it's like you can find the best company in a market and you can use that as the comp, but is this truly a comp to the best company in the market? Or is it a comp to a mid-level company in the market or a low-level comp in the market? I think that's the question that's harder to answer like in real time. And the retrospective is obviously pretty easy to figure out, but like in real time, I think for investors, it's a question of are they the next Nike or are they the next Under Armour?
Ooh,
Or
I think you've seen my
or
slide
Volcom,
deck.
right? Or Volcom. It
Yeah,
feels
I
like
don't think apparel companies are as politically charged, right, as a lot of these tech companies, and so I think they actually have safer passage in a China than Apple does, as an example. So in a lot of ways, like that gets me more comfort about betting on the China angle with a Lulu. Bruce, I'm
in other words,
showing.
what is the technology that Lulu has that some Chinese knockoff can't just do?
It's those fabrics, right? Those fabrics are unique. Do you ever, Gordon, as you mentioned up front, when you're in the gym checking out certain anatomy parts of your female counterparts that are there working out? Do you ever say, "Ooh, those Athleta pants"? Wow.
And first of all, I've never looked at any woman besides my wife since I got married back in 2017.
All right. Think
Yeah.
back a couple of years ago before that.
Well, I sometimes I go in the Omniverse to pretend to be a wayward male because just to know what that's like. And yeah, I just struggle here. I just struggle to see how these guys have any. This is classic, yeah, expansion, replicate internationally, but this is a really mercurial industry, and I just struggle to believe that any of these fabrics are like just they're magical ass presenting fabrics that nobody can replicate that people are going to pay 3x for. Because that's really what you're paying. What's the gross margin for these guys?
They have decent gross margin. They're very profitable for a apparel company. I will
Bad sign,
say
ironically, in my
This
opinion, because it's not sustainable.
It isn't sustainable. And just to add one more thing to what Gordon's saying, a large proportion of Lululemon pants are actually manufactured in China. And so, like, the differentiation of a brand having some
Is the magic the
technology advantage,
stitching, or is the magic the fabric and actually like the chemical secrets that go into that behind the scenes?
the
American
magic
Apparel.
is the marketing.
Apparel,
It's not
basically.
the stitching or the fabric. It's
Right?
the
You
marketing
yourself
of the
said it's a
brand.
high quality product. So I
Right.
mean,
But
listen,
there's a lot of high quality products on the market. But some of them
listen,
aren't marketed as well.
listen. I'm trying not to. I'm trying to avoid this because my wife does listen to this podcast from time to time. But I will agree with the assessment here that there's something different about the Lululemon pants, and I haven't seen anybody replicate it very well. What I will
I
say is
think in the
competition has been increasing. That I will admit, something I think you're going to talk about. I've seen more and more, and this is a little corner of the world observation, but I've seen the Aloe brand popping up a lot. I've seen some new brands coming around. Aloe's interesting, and I think there's always been competition, but in my little neck of the woods, I would say you see Aloe quite a bit. I would say Lulu still has staying power, and I'm going to get to that in 1 minute here, and then I'll turn it over to you. Before I drop the China piece, I think it's important to show this chart. China actually, I think, is underpenetrated in terms of sportswear. So they've had a little bit of, I would say, a volatile growth rate in terms of sportswear around the pandemic. But it's been an 11% CAGR over the last 10 years for sportswear in China. And it's still below a lot of their peers for countries with similar economic wealth. And so if you see countries that have folks with, more than 10K of income USD per capita, typically you see them spend much more on athletic wear. And so it seems like there's a long runway here for a larger market. And today Lulu only has just under 2% or 1.8% of the market share here. So they still have a lot of market. You got to remember, they felt the pandemic first. Up through 2018, that is a very impressive growth chart, right?
Still,
A
like,
quote
this is
unquote
not
more mature brand. This is sportswear in general across the board. A seesaw from 2020 to 2023, but last year it grew 15%. What
that's
other mature market do you
great.
see growing 15% that you can sell into? I will take this market. If I was opening a business, I'd be happy with this market
Just read
for
that.
a mature category that people are going to buy. It's not going away. So the question you asked earlier, Bruce, is it more like Nike or is it more like Under Armour? And that's exactly how I thought about it. And so I think you have to believe in Lululemon. You have to believe that I think brands historically tend to be one-hit wonders, and Under Armour is somewhat an example of that. And so they have a great product, but it doesn't stay. They get uncool and they fall away. And so when I was the one that originally suggested let's do Lululemon because I was interested in saying, oh, this feels like maybe the tide is turning. The most recent results were a little soft, and I'm sure Bruce will go into more detail there. Maybe it's this rising competition. I bet the next generation doesn't think they're as cool. And that actually couldn't be further from the truth. So Piper Sandler does this awesome thing. It's actually here I'm going to compliment. I've insulted the sell side on this podcast as an ex sell sider once upon a time for 1 year. And I'm going to pay them a compliment now. So Piper Sandler does a semi-annual taking stock of teen survey, and they see how teens, the Gen Z, thinks about brands, and this is what drives that next generation of growth. And so when I pulled this up, I had no idea what I was going to see. And so they survey 6,000 teens, 47 states. It's very US centric. Average age is 16. And you go to top clothing brands is the category. And number 3 on that list is Lululemon. Now, they are well behind Nike. Nike's at 34%, American Eagle at 6%, Lululemon's at number 3 at 5%. So it's Gen Z preferences of teens saying, hey, this is my preference for clothing. And I'm sure if it was a cheaper brand, it would be even higher, but it's not very affordable. Now, the thing that caught me and why I showed that slide of the handbag is if you go to top handbag brands, what shows up there at number 5? Lululemon. That's a new emergence. And they've talked about how they're seeing a lot of success here. In fact, my wife and daughter bought matching what we used to call fanny packs back in my day, but apparently they're cool now and they're called something else. I won't embarrass myself here but, too much than I already have. But teens actually see this brand as something aspirational, something that they like, and it's coming out in the survey. And so that gave me a lot of confidence that this is more of a Nike. This is not the one hit Under Armour. The next generation is seeing value here. So they're growing internationally. They're expanding their products. And the next generation is excited about them. And so for me, I think this is potentially a buying opportunity for the stock. I won't beat to death here valuation, but I did think I should touch upon it quickly. It does trade at a premium. That kind of growth has come at a premium. So it's in line with some of the top names here in the space. It is below something like an On Holding, which is a hot shoe brand. If you look at next 12 months, a 4 PE, Lululemon's about a 25. On Holdings at 39.5. You have Columbia Sportswear, same ballpark, which I would say is not as quality of a stock, but 21 times. Nike's right on par with this. So them and Nike together. And then Adidas right now, there's probably something in here I don't appreciate, but Adidas is showing at 71 times forward earnings there. So maybe there's some anomalies there. So probably not a fair comparison. But to the point that I think Bruce will bring up is if these guys don't execute and they don't turn it around, what does Under Armour trade at? Well, 12 times. Your multiple gets cut in half. And so I think that's the danger here is if these guys can't reinvigorate the growth, and it hasn't fallen away completely by any means. They've had 1 or 2 bad quarters in North America. But I think with the safety of Gen Z coming in, being excited about this brand, I think they deserve this best-in-class multiple that they're getting right alongside Nike, and they have more room to grow than Nike. With that,
just one question.
Yes.
Just one question before we leave this. Like, in order to believe a 25 times multiple, as we've talked about on other episodes of the pod, which all of our listeners should go back and listen to, PEs should generally trade in line with the growth rate of their earnings per share. Are you a believer that this is a company that's going to grow EPS by roughly 25% over the long-term basis?
Yeah. Listen, they've been continuing to expand their margins. Their international margins are strong. I don't have any reason not to believe they can't do it, right? They've got plenty of TAM to go after. They've got new product categories, which people pay premiums for. Look at handbags. Fantastic margins for the type of sector that they're in. For me, yes, this is not a stretch.
But just to make sure that we're all on the same page, their 2023 EPS growth was 22%, so still lower. Their projection for 2024 is 17%, so even lower than that. So you're of the view that you believe their EPS growth, even at scale, will reinflect, will accelerate, and will change.
What about Nike? What is
of
Nike's
their
growth?
historical.
They have the same PE. What is Nike's growth?
But we go back to the same story. Like, Nike
Single
is the
digits.
premium player in the market. It's if
So
you
is
were
Lulu.
investing in
Lulu is a
Yahoo,
premium brand. When are you
it
gonna?
would be
You
like
told
if
me
you-
up front. It's a premium product and a premium brand.
They're a premium brand in a much smaller market. It would be like if you were saying, "Hey, I'm investing in Yahoo. Should it trade at the Google multiple?"
No.
It's just a question. Exactly. So it's just a question of.
But the growth rates also reflect that. Here you have the opposite. Lulu is still a faster grower than Nike. I think they have more penetration. They have a better story for why they can continue to grow at a faster rate. So for me, I'd rather pay up for Lulu than I would for Nike. Nike probably has a safer floor, but I don't really want to pay 24 times for something that, to me, like, where does Nike go to grow?
Look, I'm agreeing with you. I think that if we did the kind of deep dive on Nike, we might come to the same conclusion that Nike is overvalued as well. I just think that over the long term, you have to believe that these companies are going to grow into their PE multiples. And if they're not, whether it's Nike or anybody else, then they're overvalued. And so I think that fundamentally, and we'll get to it in a second, I don't think it matters if you're Nike, if you're Google, if you're Lululemon. If you're not growing at the 25% that your PE multiple is trading at, you're fundamentally overvalued.
By the way, I just looked it up, so I'm just doing my mental math here, but I think Nike's going to grow like less than 1%. Yeah, less than 1%, from 51.2 billion in 2023, expected to 51.6 billion in 2024. So this is a bargain. I hear you on the point of, hey, you compare it against something that's insane.
You're doing
doesn't matter.
sales or earnings, though. You got to do earnings, right? You're looking at sales.
I'm looking at sales. Yeah, all right, fair enough. So earnings growth. Are we taking GAAP or non-GAAP here? So they're going to grow earnings 10% on a GAAP basis.
Okay, that's fair. But there's just this we're in the, I should just caveat, we're in the consumer space now, right? And some of these freaking, companies, like Warren Buffett loves companies like Coca-Cola. He loves sugar water, right? Like these companies just, I think they have a higher floor in multiple in general because their familiarity and just the retail component and just, especially these consumer brands that have a really long history, like Coca-Cola, like those companies get multiples that are higher than a peg of one. So setting that aside, but I agree, like obviously anything when you're getting these high 20s multiples or 30s multiples, like those are imputing a fair amount of earnings leverage.
I would make one point to that is I would say the food companies are a bit more of a staple where this is true discretionary spending, right? So there's probably more safety in a food name, a Procter and Gamble, those types of Coca-Cola,
Yeah,
than
and
maybe
fashion
a
is just
Nike
dog
or a.
shit. Yeah, fashion's lower quality than even packaged goods. But I will say there's been a massive renaissance in packaged goods where private label has eaten the lunch of a lot of companies like Procter and Gamble. So even there, it's not necessarily a lasting franchise like it used to be. Though I think sodas are somewhat more durable than yoga pants. Anyway,
We should leave Bruce some
Alrighty.
time to make
Well,
his poor
yeah.
argument on selling yoga pants.
Alrighty.
Yeah.
It won't be that poor. It won't be that long because it won't take much to dismantle this whole case. So, Lululemon, as we've sort of hinted at, Lulu is a lemon. It's a company I think that started out with some noble ambitions and has grown really significantly and has, apexed sort of in the last couple of years and is beginning a slow kind of downward descent for a number of reasons. They caught kind of, I would say, a cultural zeitgeist for a while, but it's hard to maintain that. And as we talked about before, with Under Armour and others, there's always other brands in the market that will be able to capture users' attention, will be able to capture customers, be able to capture market share. And unless you have a very distinct advantage and a big moat, like a Google or like a Facebook, which have real network effects, then it's almost impossible to maintain that advantage over the long term. There's certainly companies that have done it. I would say Nike is a good example of a company that has done it, but it's almost impossible to replicate that level of success at scale for most companies. And Lulu's has worked towards that goal for a long time and produced some incredible results. But unfortunately, those results are past performance and certainly not indicative of the future. If we go down to the next slide.
I'm not sure I want to see this one.
God damn it.
Just to talk about
Nice
Lululemon,
belt.
the slide for our listening audience says tight pants and a loose valuation. And the picture is, I think, of maybe it's of our friend Gordon in his Sunday finest, just
That's
wearing
way
a
too big of
pair of
bulge. It's way too big of bulge. I'm more like a Ken doll. You know what I mean?
just wearing a pair of tight pants and with a crop top on. Nonetheless, moving on to the next slide where we talk a little bit more about what that means, tight pants, loose valuation. We talk about a couple different factors, I think, in an operating model that, should really be a big part of the determinant in value. One is certainly revenue growth, like how the company is actually growing. And when you look at a company like Lululemon, in 2023, they grew at 19%. So not great, but not horrible. Over the next 3 years, the forecast from the street, which is, used by most investors or a lot of institutional investors, and is also gathered from, working with the company in terms of, forecasting what the long-term growth of a company looks like, is pretty bad. It goes from 19% to 15% in this year in 2024 to 14% next year in 25 to 13% in 2026. And sometimes you can offset that by getting operating leverage. So on the EPS side of the story, you can sometimes offset, slowing or decelerating revenue growth by buying back more shares if you're highly profitable, for example, or by cutting some of your expenses on the operating expense line and getting to higher profitability. Unfortunately, for a lot of companies in the retail space, that's harder to do because they have a lot of fixed costs. They have to pay for mall stores. They have to pay for merchandise. They have to pay for manufacturing. And that stuff is fixed in a lot of ways. It's not discretionary. They can't really change the equation there. For a company of Lulu's size, they're oftentimes already getting economies of scale. So squeezing out more margin points there is very hard to do. And so when you get to companies of this scale and this size, it's really just dependent on their ability to grow. And EPS growth here is also, in kind of a decelerating pattern. It's growing at 22% last year. In 2024, they'll grow at 17%. In 2025, they'll grow at 16%. In 2026, they'll grow at 16%. And these are the estimates from, Wall Street analysts that are, largely positive on most stocks they cover for obvious reasons. They're not completely unincented sort of, prognosticators of the future. They usually work with these companies on the investment banking side and other capacities. And so I think it's one of those things where the forecast here, while it's not perfectly accurate, is probably directionally correct. And I think George wanted to say something.
Yeah, no, I was just going to comment. I mean, I think what you're seeing a little bit here in the EPS growth and revenue growth, right, is the last 2 quarters have been a little disappointing. There has been some comments around softness in the market. I think analysts do tend to, you're showing mostly forecasts several years into the future. And so analysts are taking 2 comments of quarters and forecasting that into, the entire future of the company here. So I wouldn't over rotate on that. I think it's, the question is it a short-term blip or is there something that's really changing here? And my argument was with the Gen Z population, right? You continue to have strong brand presence. I think it's more that short-term blip. The one other thing I'll say is if you do take the EPS growth, you look at that 24 PE that we talked about before, you still are getting 17% growth this year. So if you take the PEG, you divide the PE by that growth, you're at 1.4, which is not horrible for this type of company, especially for a brand leader, a very high quality company like a Lululemon. That's actually not a bad ratio at all. But anyways, I'll turn it back over to you.
I think said differently, I think what George is saying is you're overpaying, but you're not overpaying by that much.
That's not what I said, but you can keep going.
You remember, like Cloudflare wasn't 1.4, right? This is in tech. These are high pegs, to be clear.
And this is a retail brand. I mean, they're making a physical product. I think the thing to think about though is like sort of putting aside the 2 quarters of softness, which I agree we're very soft and are probably a pretty good indication of the future. Like these are yearly forecasts. So even if you were to say, look, plus or minus 1 or 2 percentage points, it's still not going to change the overall directionality of the company on the EPS line or on the revenue line. And usually these estimates are off, but they're not off like, they're not off by,
long-term estimates. Oh, they all change constantly. So
I would ask one thing, but I want to just make a general observation that Bruce is the one of us that was not a sell-sider, I think, or at least not a sell-side analyst. And you put more weight on these things than we do because we know how low quality they are. So let's just start there. But I'm just generally curious if you guys have a view, like, is this growth coming more from penetration, no pun intended, or from like more categories, higher share of wallet? Like it feels like it's a penetration story. I just want to verify that.
I think the growth is coming from, what George had mentioned in terms of international expansion. It's certainly not coming from, their core customer base in the United States or in Canada. It's probably not going to come much from their expansion from women to men. It's mostly going to come from their ability to expand into kind of untapped markets. But those markets over time, I think,
new product categories too. So I would say you're probably not selling, and someone their 10th pair of yoga pants, but you might sell them something for running. You might sell them something for, their fanny pack, as I called it.
Well, a handbag, right? So I made my my current wife return a handbag from Louis Vuitton that cost $5,000. So I don't know what these guys are charging. I assume not $5,000, but handbags is a gigantic category, right? Like LVMH they have a $452 billion empire. So if that's really on the table, maybe
I don't think that's on the table in the next 10 years for a company like Lululemon. The premium handbag category is much, much different, I would say, than kind of the average retail yoga wear category.
What is the price point? These things, like, is this more of a Michael Kors bag, or is this the bag you buy at Trader Joe's for $3? Like, how where on the scale of premium is that?
Yeah, I mean, my sense is you're probably more in line with like a Coach and those types of price points.
$50, maybe 100.
I would say more than that, but yeah, call it in the low hundreds.
Yeah. Okay.
But I'd have to
Anyway,
look it up for sure.
moving to the next slide. So I guess the question that most investors are asking is, what's wrong with declining
Bruce,
growth?
you put your photo on here.
That looks like George.
You're giving away your identity.
So
Sorry.
that is a good question. I think all investors in Lululemon or folks that are thinking about buying the stock should ask, why should we buy a stock with declining growth, weak EPS, and a high PE? It doesn't seem like it makes sense. If you go to the next slide.
You could buy DigitalOcean.
Well, the reality is right. It is nothing if you're Lululemon. Lululemon, despite the fact that it has declining growth, despite the fact that it has decelerating revenue, despite the fact that it has declining EPS over both the short term and the long term, is still trading at 1.62 on a PE to growth basis. And as we've talked about before, stocks should really be trading around 1 times their peg. And this is a company that's
very few trade around 1 times peg, to be fair. And
What?
I mean, that's a bargain if you find that.
By the way, I see 4 shoe brands on this page for what it's worth. I don't see a single apparel brand. Nike has some apparel, but
have a very significant apparel presence.
this
Puma has significant apparel. So we're showing the stocks: Lululemon, Nike, Puma, Skechers, and Under Armour. And the reality is, I think most of these stocks are actually expensive relative to their peg basis, relative to their long-term growth. They're all expensive. And Lululemon is really, outside of Nike, the most expensive of the bunch. And I think it's one of those things where, as an investor, you're looking at what's the risk reward trade-off here for investing in a stock. Is there more upside in the stock today, or is there more downside in the stock today? And how should I equate for those things when I'm making this decision? And so I think, as I think about the stock today from just a valuation standpoint, so sort of put aside the fact that they make, a physical product, that they have to build out stores, that they have to sell in a different geography to find growth. Just look at the valuation of the company today. Look at the long-term growth prospects. Look at the revenue. And I think you would say to yourself, this is like a stock to wait for it to fall, if anything, to when it's below 1 times peg, right? Or when it's below, or when it's at a reasonable valuation. Today, on just the operating metrics alone, it's a very expensive company to buy.
So I guess I would ask you, I think I just worry that this is not the right set of comps. There's not a comp in here that's comparable to Lululemon, because all of these are men's brands. Nike probably has some women in it because it's so Gen Pop, but Puma, Skechers, and Under Armour are definitively men. So I'm just going to say, maybe that's the strength of it, is that they are the Nike of women, but this is a weird chart because I just don't see a real comp here.
I don't know. I think that most of the time folks look at the kind of, I would say, just broad-based apparel companies. I don't know if there are many kind of women specific. I mean, look, when you think about Lululemon, I think the power of 3 times 2, suggests that they're going to become more of a gender neutral brand in the future, even though they're maybe more focused on women today. I think, like we've both talked about them being comped to Nike and Under Armour. I think both of those brands have significant presences in both women and men. I think Skechers is probably more women focused on balance, and I think Puma, might be in the middle as well. Nonetheless, I think, like, as an apparel category, like, you sort of have to, I would say, put aside, like, even who they're selling to. Just look at the raw kind of fundamentals of the business. Your earnings are growing in the mid-teens, and you're buying the stock as if your earnings are growing in the mid-20s, regardless of who they're selling to. It doesn't make sense.
I mean, the other day, like, there's nothing like, I mean, just I'll finish this, not argue this anymore because I don't have a strong point of view, but I would just say, looking at this as an outsider, like Nike, Puma, Skechers, and Under Armour, all worn by men. I'm going to just debate that Skechers is a female brand. Like, both my sons wear Skechers. It was a skater brand. I can't think of an equivalent to Lulu. And like Nike, Puma, I could add Adidas, which is Cody, right? There's like a whole bunch of men's brands that you could, private or public, that compete with these, but I can't come up with one for Lulu, and maybe that's partially why they trade so high, for what it's worth.
It may be a different, and I think that's a good point, Gordon. But I would say maybe a different question. I mean, I think there is something there to say women do tend to be more spenders and shoppers. I would also argue than men, but end of the day, a sale is a sale, and Nike is driving quite a bit of sales, probably across both genders. But I would say, like, we're focusing on the peg here, and so if I look at the pegs for our audio, audience, Skechers stands out as a very low peg. So you say, hey, I want a peg of 1. Well, Skechers and Under Armour are the lowest on the list. So Skechers has a PE of 14 and a long-term growth rate of almost 23%, which shocks me. And so you get to a peg of 0.63. So would you be a buyer of Skechers or Under Armour, which we've been bashing on a little bit without talking about too much? It's, consensus PE is a little under 12, long-term growth rate of about 10. So you get a, 1.2 peg. So would you buy those? Because the peg looks better.
No.
So what would be
I
buyers
wouldn't
of those
touch
stocks?
the category. I wouldn't touch the category. I think the category is overvalued. I mean, Skechers may be undervalued. I haven't spent time on the stock, but I wouldn't buy the category. I think the category has a lot more downside risk than upside risk here. And to the point about whether it's men or women, I mean, you should ask yourself, or an investor, you should ask yourself, are you willing to pay a premium price because they sell to women, despite the fact that their EPS is decelerating over time? And maybe you are. But I think for my money, I wouldn't be necessarily willing to pay more, no matter who the audience is, whether they were selling to men or women.
I think one of the other, I'll quickly jump in here. One of the other differences is also like Skechers is very much a cheaper brand, right? It's not an aspirational brand. Like Lulu is more of an aspirational brand, as Chris Rock, he's talking about $100 yoga pants. Who wants to pay $100 for yoga pants when you can get yoga pants for $20, right? So it's an aspirational brand, and luxury tends to trade at a premium, and it's because it has that aspect to it. Skechers and Under Armour don't have that pull. No one is excited when you show up with Skechers on. It's like, I got some new shoes.
Puma either.
Right?
Puma is by no means premium. I mean,
Yeah.
Nike's at average, right? Slightly above average. So anyway.
All right, let's not beat a dead horse.
We've covered this song at length. Moving on to the next slide. The question that we all have been asking ourselves, and I've asked it outright, is: should you catch a falling knife?
Is it lubricated? Is that a lubricated knife?
All right. And as we mentioned, so George had cut his own version of the data, and it was obviously tailored to create the illusion, I think, that Lululemon is kind of a growth stock, that there's a lot of upside left,
showing the history of value creation.
The reality is very different. If you look at Lululemon over the year to date, kind of the most recent period that investors should look at, really, they've lost 30% of their market value, right? Like, this is a stock that has taken a beating and is still trading at a premium, despite the fact that they've missed effectively the last 2 quarters. And so I think the question is, like, from a trend line standpoint, do you believe that this stock is going to reinflect, is going to start growing, or do you think that this is the kind of broader long-term trend line? And I think the revenue and the EPS tell you the story.
These yoga pants are on sale. It's time to buy, my friend. It's rare that you get a pair of Lulus on sale.
If you hold on, they might be even at a deeper discount. You just have to wait. Moving on to the next slide. And so what I said in the previous slide is that Lululemon is losing on the street and Lululemon is losing in the streets. And so we mentioned it before, but Lululemon is now competing against not only the legacy companies in the space. So if you think about kind of the Athletas or even the Nikes who have been around for a long time, they're also competing against newcomers like Aloe, who has their own brand of stores that are in kind of all the high-end malls. They're competing against Vuori. These are companies that are starting to take more and more market share, and they're starting to encroach upon their price point. So I think this jeopardizes not only their ability to grow on the top line, but it could potentially also jeopardize their gross margin profile. And this is a company where you have to maintain sort of the cachet of the retail buyer. Otherwise, you face real operating risk to your profile from a growth standpoint, to your profile from a gross margin standpoint, ultimately to your profile from an EPS standpoint.
I didn't see either of these brands show up in the teen survey. I just have to say,
I don't look
the
at
next generation of yoga pants buyer.
It's also, those numbers didn't really change that much, right? Like, you're going 74 versus 80 versus 74, since December 22. Are these really different numbers? Like 19, 10, 12, 14, 15 for Aloe? We'll
I
see.
think this is the start of a broader trend line. I just think it also goes back to the point that this is a product that has a very, very low moat, a very, very small moat rather. There's any number of companies or products or direct to consumer Instagram influencers who can spin up a Chinese factory and create their own brand overnight. I think we've seen a lot of kind of macro influencers. We talked about Taylor Swift and Kim Kardashian create very big brands around this, but it's virtually, it's easy for any person, any influencer, any individual to create a brand overnight at this point. And so I think the barriers to entry here are so low that I'm just showing Aloe and Vora as kind of like Vuori, I think, as kind of the two of the larger brands who have encroached upon kind of the, I would say, the consumer zeitgeist. But I think that this is just a trend that's indicative of the future itself. Like if you don't have a moat, how do you preserve your value?
So
Vuori's been the
I would
same at 11, right? And then you got from 9 to. I think Aloe's interesting from 9 to 15, but it's not super clear these guys are losing a ton of share either. By the
I will
way,
give two data points or two counters to that. I mean, quickly. I mean, I do think for all the time that Lulu has been dominant and others have tried to jump in, right? There's something with their cut and their fabrics that is hard to replicate, right? And I would say people have not done it, and people keep going back to Lulu because people have been taking aim at them for a long time, and there's something about a Lulu pants that they know how to fit. My wife tells me like Lulu's not only great for like it's one thing to fit someone who's like super in shape. Lulu knows how to fit all shapes, and they've done that very well. So whether you're super in shape or you're aspiring to get in shape, they have a pant for you. Um, but I will say the counter Aloe does worry me a little bit from the category standpoint. And the only reason I say that, and this isn't a broad data point, but I would say like living in a decently affluent area, I've noticed Aloe coming up everywhere. And so that always feels like that's where trends can begin. And I see it more and more, but I see those same people that wear Aloe still wear Lulu too. So I don't think it's a battle lost by any means. But I think that's where international and expanding those markets where they're underpenetrated is a lot of the opportunity set, and they can continue to keep share in pants and try to grow those accessory categories. But Aloe is the one that I would watch. I agree with Gordon, and I agree with you there, Bruce, as well.
So moving on though, in terms of as we think about the Lululemon's story versus things that we've seen in the past, it really is, and I think George alluded to this. It really is a question of whether this company is Nike or whether this company is Under Armour. And I would say, like, if you rewound the clock 5 years or so, you would say that Under Armour was the next Nike. But if you fast forward to today and you move to the next slide, you can see that Under Armour isn't Nike. Over the past 5 years, their stock is down 70%. They're kind of a $2 billion market cap company. Their PE, peak to trough, has gone from 80x to 10x. And so I think it's one of those things where, as you think about what this company is and what this company could be, you really do have to look at some of the companies that have come before it. And I think in these markets, it's hard to handicap, like, is this company going to become the next Nike? Is this company going to become the next, any retail brand? Because it requires a lot of things to go their way. And remember, Nike was created in an era where it wasn't as easy to become an influencer and start your own brand, to call up a factory in China as an individual and create your own, footwear brand, create your own retail brand. And people are doing that all the time nowadays because the barriers to entry in these markets are just incredibly low. And so I think it's harder and harder for companies to maintain consumer mindshare. And even if they can do it, it's costlier and costlier. They have to pay for more and more square footage. They have to pay for more and more advertising. They have to beat out other brands that are in the market today. And so I think the equation for companies today is different than it was when Nike became sort of the behemoth that it is. And I think it's harder to look at a brand like Lululemon, which I think is objectively overvalued on just a PE basis, put aside the brand itself, and say there's way more upside in this company than there is downside. Because at the very minimum, even if they do continue to execute in any market, they should still trade lower and get back down to 1x peg before they start to, trade up, unless their EPS inflects. And I don't see a situation where their EPS will meaningfully inflect. I mean, creating new stores, creating new brands, even in other geos, that takes time. That takes resources. That takes
They're already
energy.
seeing the
It's also
inflection.
CapEx.
China's accelerating, right? I mean, it's $1 billion revenue business over there. I will say one big point of differentiation versus Under Armour. Under Armour did not own a category. Under Armour was trying to be a Nike, and they were competing with Nike squarely in their own, areas. So apparel and shoes, and they fell down eventually. Lulu owns their category. People are trying to imitate Lulu. So Lulu is more like the Nike than Under Armour was in their day. They didn't own anything. They weren't known for anything. So I think Lulu has more brand power and cachet than Under Armour. And maybe it's somewhere in between. Being a Nike, granted, is there's one Nike, right, for a reason today. Few brands have done that, but I think they're a lot closer to a Nike than they are to an Under Armour.
Maybe that's a good segue. Do you have more to add here, Bruce, or can we start talking about how we really feel?
I just a couple of really choice quotes here from the founder of Lululemon, and these are direct quotes from him.
Are these woke comments?
These are very unwoke comments.
Can you weave in some American Apparel quotes too while you're at it? Because this feels like the woke American Apparel.
So the founder of Lululemon is a guy named Chip Wilson from Canada, and he said he named it Lululemon because he thought it was hard for Japanese people to pronounce the L, stating it's funny to watch them try and say it.
That's the most racist.
See, he was thinking about global. He's already on to the global expansion. But yes,
that's a company that is basing its growth in the Asian market, and a founder who is just objectively racist. Moving on to the next slide.
By the way, that's amazing they've survived that. Oh my God.
One thing that this great founder of this great company said is, with regards to his women's leggings, he said, they don't work for some people's bodies. But moving on to the very last.
I think they've improved there, but anyways.
Moving on to the last quote, talking about plus size clothing, he said, the extra fabric it would take to make the clothing is a money loser for sure. And I understand their plight, but it's tough.
Chip Wilson.
So as you can see, guys, the ethos of the company is based in something very different than what the company tries to portray. But I think that this ethos is probably more reflective of what the valuation of the company should be.
I just want to officially distance our podcast from these comments.
These are direct quotes from the founder of Lululemon. They are not
to our core audience.
Well, it does make me think that Ozempic and all these drugs will be another boom here for Lulu, if that's true.
I can't believe this guy actually succeeded saying this shit. He must have disavowed the company ages ago, right? They kicked him out like ages ago, I assume.
Yeah, he's no longer
CEO.
Yeah,
I think the thing is, like, from my perspective, I actually believe the short side of the story here. I think it's a phenomenal brand. I think they've done an incredible job kind of building a revenue profile that very few retail brands will ever get to. I think, though, as I think about the risk reward today, the downside here is just much, much bigger than the upside. Like, for most companies, I think it's a question of, do you think this company could double, like reasonably double? Is there a narrative or a pathway or a profile that gets them to twice as much revenue or twice as much EPS as they have today? I just don't think it's there for this company. Like, could they get to $20 in EPS? I think they probably could. I think it's going to take them several years to get there. And I think their growth rate of around, call it 15%, 16% is probably, sort of where it should be over the long term for a company of this size and this scale. So, like, I think the stock should trade 1x peg, $20 EPS over the very long term, 15 times on that. It's like a $300-ish stock. So my view is kind of in line with, my side of the story here.
Why don't you go, Georgie?
So I will say I recommended this one originally because I thought I would be squarely a short, and this would be an opportunity to dig into something that I would look to short myself. I'm less short than I was before, and so I think seeing some of the success that they've had in China, some of the success they're having in other categories, I do see the parallels to where Nike has built a successful brand. And so I would say I wouldn't be putting on a short on this stock today. It's certainly not cheap, and like it's certainly like there's higher risk execution going into these new markets and new categories. You know, do they continue to scale? Do they last? I think that's a much harder execution risk. And so I wouldn't jump into the long side here. I think there's just still too much risk, but I don't think it's quite the opportunity for it to go down that I thought it was. And if I were, you know, do you believe that they can grow international? They have that kind of brand. Do you believe they can hit these other categories, be it shoes, be it bags, whatever that is? Then I think you're a buyer, but I would wait for the metrics to turn in North America. I think they'll probably stabilize. I do take a lot of the thing that honestly really turned me, besides looking at China, looking at the margins there, was looking at that Gen Z survey. Like, I think there's a lot to be said for a brand that has the youth behind it, and this brand still has that. If that went away, then I would definitely be shorting this if that didn't show up for me. So those two things turn my opinion, but I'm not sure I'm jumping into the long side. So I hate holds, but I'm kind of a hold here, and I would wait to see some of those metrics stabilize.
I guess I would question you guys. Maybe there's a pair trade here. You know, those are easier to make. It definitely concerns me that this is a volatile industry. But one thing that was presented as a short argument that just the barriers to entry are low for these influencers, and I don't think that's where Lulu competes. I think there's going to always be like a brick and mortar standard of excellence. There's people are always going to want to go to a Nordstrom. They're always going to want to go to see the high end products and buy them in person impulsively, and that creates, I think, a place for a company like Lulu. And I can't believe that it's been since 2010. It's pretty shocking that Nike hasn't figured out how to reverse engineer one of these pair of pants. Like, nobody has. So they're as much as I'm making fun of all these nanotechnologies that are underlying all these quantum physics that are underlying these technologies, these booty lifting technologies, like nobody's done it. And people still want to be able to buy pants and not wait 3 days. So I don't know, man. Like, definitely the multiple prices in something, but growing in the high teens in revenue and pricing in like a high 20s multiple, bullish, but not insane. So I'm in the same place, but I'm more bullish than I thought I'd be, because I just hate these like things because it's really hard to predict people's preferences. But these guys have had a lot more staying power than I ever would have expected after Volcom, we haven't even mentioned all the horrible companies like Ocean Pacific, and there's so many brands. Hot Topic. Like, just walk into any mall 5 years ago and you will find a dozen of these shitty brands, but most of them are not women, and most of them have been around gaining share since 2010. So I don't know. I think I'd be inclined to be like long this and short Nike, or there's probably some way to play this, I think, but I'm not sure how. Maybe you guys could propose any kind of pair trades.
Yeah, I think the pair trade would be to short the entire segment.
That's not a pair trade.
Yeah, you could convince me to short Nike and go long Lulu. You could convince me to do that. So I'd sign up for that one.
And long cash and double leverage short the sector. That's a pair trade. I'm not sure the risk people would let you get away with it at Bally. I know. Wrap it up. He's passing out.
So one I'll say, so just to recap, it sounds like we've got Brucie's a short, we've got Gordon a week long, and I'm somewhere in a hold to long, maybe neighborhood here on Lulu. So with that, appreciate everybody listening. As I always like to wrap it, bulls make money, bears make money, pigs get slaughtered.
Say make money, money, make money, money, money. Make money, money, make money, money, money. Money makes the world go round. I'm not talking